Hey, we're live, everybody. Thank you for joining us in this room. Welcome to panel 2. Just want to remind all the panelists real quick to mute your microphone when you're not talking. I heard a little squeaky in there. That means your speakers are causing feedback for somebody else that's speaking, not for you. But go ahead and Steve, take us away.
All right. Good morning, everybody. We're here to talk about the Cleveland multifamily market. We're a little bit behind schedule, so we'll just jump right in this. We've got 4 panel members. And I guess I'll just kind of go around. Dan, if you could introduce yourself.
Good morning. Thank you for having me. I'm Dan Burkons. Opened up the Cleveland office of Marcus and Millichap in 2003. Specialize in the sale of multifamily properties throughout Ohio and the surrounding states. Last year we sold $900 million worth of apartments, from $500,000 to $250 million.
Okay. Nick, how about you?
Hi, Nick Soder. I'm the principal broker at Adams Lynch Associates. Started the firm in 2012. We're a boutique real estate investment firm with a focus in multifamily. It's just 2 brokers here, and we focus in Northeast Ohio multifamily sales. Probably a little slightly below the institutional level market, but represent mostly private investors and buyers in Northeast Ohio.
Thank you. Ezra.
Yes, I'm Chief Operating Officer, Stark Enterprises, real estate development firm headquartered out of downtown Cleveland.
Okay. Last but not least, Michael.
Hey, good morning, everyone. Michael Panzica. I formed M. Panzica Development earlier this year, focused largely on the urban neighborhoods of Cleveland, multifamily mixed-use development.
Okay. All right, so as everybody knows, we're here to talk about the Cleveland multifamily marketplace. And we'll just jump right in. What are we seeing out there? I guess we'll start maybe with the brokers. What are we seeing in terms of activity and trends?
The market right now is extremely strong. I've been saying this the last couple of weeks, the market today for multifamily investors is stronger now than it was at the beginning of the year. There's that much activity from buyers looking to invest in Northeast Ohio, both locally and from across the country, primarily the East and West Coast. So the market is very strong right now. There's obviously a lot of uncertainty, but we're seeing a lot of activity.
Yeah, I echo Nick's sentiments. We've seen a lot of activity in terms of closings. We've closed a lot of deals. A lot of deals that started before COVID. Some stuck with it. Some fell apart. We were able to pick new buyers, and actually none of them really had any big change in purchase price. There's been not as many new deals launched since COVID, but we're actually starting to launch some big ones now and some small ones. And so far, the feedback has been there's been a lot of money on the sidelines, and the interest rates, which I mean to say they're a record low would be an understatement. The interest rates are fueling people to pay prices that, on stable assets that are probably more than they were prior. I think the dislocation has been some of the value add deals. Pricing's gone down because the debt is not as advantageous now for value add deals as it was prior. But for stabilized, it's amazing.
Let's hear from the developers. Ezra, what are you guys seeing out there?
Well, it's a very different perspective, I think, than the brokers. On the sales side, on the transactional place, I agree with the brokers in the sense that there's a lot of money looking to buy, and I think that the cap rates are staying low, and the pricing is pretty aggressive because there's a lot of money looking for real estate assets, and with the disruption of where office and retail is, I think a lot of money is pouring into the residential sector. On the developer operator side, I would not make it as bullish, especially if we're talking specifically in the CBD, Ohio City. University Circle is a little bit stronger because Case Western Reserve kind of is not housing the students. So there's the student population of Case and the schools around there, I think are propping up the occupancy rates in that sector, in that section of Cleveland. But there's definitely an oversaturation of development, both in the Cleveland downtown area as well as Ohio City, Tremont. And what we're seeing in the marketplace is a flattening of rates. So to Dan's point, besides the fact I think as a challenge for the debt markets for value add. I think the reality, it may look good on paper, but I think the reality of value add in this marketplace is not so real. I think what we're seeing is an increase in concessions and a decrease in demand. And so I think that it's going to be a challenging environment in this specific marketplace for multifamily as an operator.
Michael, you seem to be working in some of these markets that Ezra was just discussing. Your thoughts?
Yeah, I would say, going into COVID, the biggest impact we saw coming through COVID was actually, I would say, in the equity markets, investor markets that we partner with. Had some investors that just went completely on pause, a number of which are still on pause. Investors that previously were interested in joint venture equity investments, shifted focus to maybe be a more preferred equity position. And others that, even like debt funds, both Dan and Ezra mentioned the availability of capital for value add opportunities. Just some of them are out of business. A lot of them are out of business. And so I think that's been the biggest challenge on our side. I will say, though, I think some of it is a level of irrationality that, not every project is created equal. And the notion that every project is going to be affected on a development, from a development perspective, a year or 2 years from now, the same as it's being affected today isn't necessarily the case. So I think some of the two is wading through some of the irrationality that investors, developers are all kind of feeling right now.
Okay. Ezra made a comment about maybe rents and concessions going on. Dan, you and I were talking, and you had recently read something about year-over-year increases in rents. Can you discuss that briefly?
Well, I can tell you a lot of people have been cautious about raising rents. However, look, collections have been so far very strong. Now, of course, when stimulus guide was taken off, I think we're going to, find out, paraphrase the Warren Buffett thing. I mean, we're going to find out who's naked underneath, at a tenant level when the tide comes in. I think there's going to be a reckoning there. I also think the government's going to probably continue to spend a lot to try and soften it. So I don't think any of us know the true vacancy in the absence of this. And the question is, okay, how fast can the economy recover before it tapers off and ends?
Yeah.
Well, and to add to that, I think I saw the same study. That was largely relative to one-bedroom units. Isn't that right, Dan?
Yeah, I think that's right.
Yeah, so it's also indicative of the times. People now are socially distancing, and they're looking to get out of the two-bedroom apartment because they're working next to their roommate and looking to work and live by themselves. And so, on top of that, you've got, I think, a big boomerang effect in markets like Cleveland, where you've got, let's say, a Cleveland native working in Chicago that's working from home and working remotely and decides to move back, at least for the near term, to be closer to family. In some ways, Cleveland's the beneficiary of what's happening in larger cities, but how sustainable is that on a long-term basis once the dust settles remains to be seen.
Nick, what did you see? You had floated me an article, and it was interesting to see that a couple of three Ohio markets made your list.
Yeah, I was surprised to see that it said one-bedroom year-over-year rents were up 16%, and I don't know if that's an effect of the new construction just getting higher rents. But I mean, rents had obviously been trending upward, but I was surprised to see it was that high, and that Cleveland was I don't know how many markets it was, the top 100 or 60, but Cleveland was number one. And then I think Cincinnati and Columbus were both in the top 10. So yeah, I think what Mike was saying is true in that people, we're benefiting from a lot of the boomerang type folks coming back to town, and all the new development raising the bar for the one bedrooms, as far as the rents go. And I don't know if Mike and Ezra, if you've seen, is there more of a demand for your one bedroom units?
When you said Cleveland, what? How do you define?
Not the same.
How are you defining the MSA when you're saying Cleveland?
Yeah, and that's what I don't know. It was an article I found the other day. So the data was not there. It's from Zumper, which is a rental tracking company. So I don't know what they were defining, whether it was CBD. But, I was just surprised to see Cleveland at #1 on a positive list.
Yeah.
So I don't know what all the data was.
Yeah, because what we're seeing and what we're doing as a company is, the last 10 years was a complete shift to the urban core, the reurbanization of the major American cities. And, again, it was interesting. Even through the pandemic, we were seeing reduced traffic, but decent traffic. And as soon as we experienced the protests, it was hitting a cliff. And from that point of the protests till now, the traffic in downtown Cleveland's basically non-existent in terms of leasing activity for apartments. Part of that, I think, unfortunately, is we're seeing a little bit of a decrease on the security side, right? The last 3 days, you had somebody that got killed in Ohio City. You got somebody who got shot in the warehouse district, and you had an armed robbery near East 4th. That's just the last 3 days. So I think one of the things, again, if we want to maintain some strength in the downtown residential marketplace, I think the city really does need to double its efforts in terms of security. I know we'll touch the abatement in a second, but what we're seeing is that potentially this is not necessarily a temporary disruption, but could be a sign of a complete reverse trend where now millennials who are now going to have families may want more of a suburban lifestyle, both for security, school districts, for social distance components, and and we can't really underestimate working remotely and how that's impacting how people want to live. So again, why were everybody needing to be in New York City or Chicago? Because that's where the jobs were. Now, as we see as people working remotely, they don't mind having people working. You could work for a New York company, potentially in Cleveland. You could pay that person a cheaper salary because it's a lower cost of living. So I do see the one bedrooms growing a little bit, but also I'm seeing them more on the suburban markets versus the urban cores.
I guess that brings up a couple of issues. Robert Weeks in the audience was wondering if there was any impact on micro units. Is there more or less demand? And then I guess, are we looking at a bubble in the Cleveland multifamily market, the CBD?
I think I think there's a tremendous bubble. I think that bubble, and there's so much coming online right now. I think there's going to be we're going to hit a very bad bubble with downtown Cleveland unless we change some significant dynamics. I also, I think micro units in downtown Cleveland are not going to work. I think our rents are too cheap. Micro units are for markets that are not affordable, and especially now when we are living more and more at our home. That's where I would say it's a little counterintuitive. People may want the 2-bedroom because that could be their office, if you will. I think micro units are so not where everyone's headed in terms of lifestyle, because we're ironically investing more. Everyone's investing in their backyards. Everyone's investing in their houses. I think micro units would not be successful in downtown Cleveland.
Michael, you?
This is also a trend that is happening nationwide in CBDs. Not necessarily specific to micro units. I'm saying specific to, I've got a good friend that has a large portfolio in Chicago, and their entire portfolio that is outside of the CBD is doing terrifically well. Their 2 assets that are in the CBD are getting crushed because the previous attraction of living there was the ability to walk to work. Well, that's no longer. I think you are already starting to see a trend, at least in Cleveland, of more demand to the neighborhoods because it's a little more of a 24/7 lifestyle and away from the CBD. And, it's what Ezra's describing with the crime. It's a little bit of a downward spiral because you've got less people that are working there. You have less people that are living there. You have less eyes on the streets, so then more crime. And so Ezra's right that something needs to step in to stem that tide. Until that happens, the trend away from the CBD is going to continue.
So I'll move over to the broker side. Nick, I guess I'll start with you before moving to Dan. What are you guys seeing in terms of these trends?
I mean, I think I haven't seen anything specific as far as people wanting to live more suburban or in the central business district or in urban areas yet. But I've certainly heard and read quite a lot about it. So it seems like that is certainly something that could be happening in the future. And we look at 1,200 or so units coming online downtown in the near term in the next year or so. That seems like quite a bit for where we are now. Especially when you walk around down today, it's certainly a lot quieter than it was last summer or 6 months ago or in the fall. So, from a buyer perspective, I think there's a lot of buyers that are just looking for opportunities. So they're not, it depends on the investor and what they're looking for, whether they want to be in an urban area or a suburban area. It's case by case right now. So, for me, I guess it remains to be seen as far as on the investment side, what will be happening down the road as we get through the COVID and public unrest and everything else coming on in the near term.
I would say I agree it's too early to tell, but as far as CBD and, if you extend that to Ohio City and so forth, as far as that goes, look, there's certainly more supply. I mean, there will be more supply over the next few years. So that part of the equation we know is going that direction. The demand, I mean, look, I speak with, developers like Ezra and Mike all the time, and I have heard a lot of the same things, that there's been some downward pressure on applicants. So I wouldn't be shocked to see some softening, in the near term, in the 1-2 years. What does that say for the future? I don't know. I think it's too early to predict that. I personally believe that this urbanization trend isn't changing in the long run, but I think it's going to have a setback for a little while. And in terms of sales, look, there's nothing been on the market in downtown Cleveland since COVID started, so it's impossible to tell from a broker standpoint what the difference in demand will be. But we have a 56-unit deal on the market in Midtown right now that recently converted from office close to Cleveland State on the Health Line. By the way, if anyone there's a buyer, we're shamelessly say it's a nice deal with 13 years of tax payment left. Let me know. But a place like that, hey, a lot of the people who work there are University Circle, healthcare type employees. Those guys still have to show up to work. Nurses don't work remotely, if they're telenurses or whatever. So, there still is a place for people who need to live close to work.
So if we've got a little bit of a stagnation, it sounds like, going on the CBD, kind of a hot topic issue right now is the city of Cleveland's abatement. How important is that?
It's essential. It is an absolute joke. It is an absolute joke that they're looking to take it away. I mean, it's just anti-growth. It's an anti-growth mindset. It's the same thing of pulling back on the sense of security. We had all this momentum over the last decade, and now to do this optically because somehow that's perceived as ignoring the neighborhoods or whatever it is. I mean, watch development go to a complete halt. Dan Burkons, who's one of the best in the business, did you hear what he said when he was pitching that property? What was one of the highlights, unsolicited, and was a great leeway? He mentioned the tax credits. If you want to stop transactional real estate, especially in the multifamily sector in downtown Cleveland, get rid of the abatements. It's completely destructive, and it's ludicrous that they're thinking about it.
Yeah, I'm going to jump in as someone who isn't directly affected.
I didn't mean it. I didn't mean to take such a neutral position, but
Well, no, I'm going to jump in, and I'm going to piggyback. And I don't make more or less money by the tax abatement specifically, like an owner or developer does. I'm going to tell you, as somebody who's active in different areas of the market. I mean, and by the way, I was a relative pioneer. I moved into downtown in 2004, which was pretty early, and was there, watched it rise up. Downtown Cleveland would not exist in anything close to what we perceive it as without tax payment. I've said it since day one. These deals are very difficult to make sense, even with the tax abatement, and they would be impossible to make. It costs way too much to develop, and the rents are not high enough. There's no way the math works without tax abatement.
And they already, even with tax abatement, often need additional subsidy. Tax credits, low interest loans. So I won't jump in quite as strongly as Ezra, but I agree as strongly as Ezra. Let's put it that way.
Yeah, they're really. I mean, listen, if anybody out there is looking to do with this, it really will hurt our economy. This rebound Cleveland's had is tremendous. It's exciting for people, our age who are, 10, 15 years in the business, or, the next generation of leaders. I mean, this will stop that momentum tremendously. It really is. The perception, is, hey, it's, freebies for the rich. I mean, not many people who've developed apartment buildings downtown Cleveland have gotten very rich off them yet. Maybe their kids might, but I mean, this is a slow growth deal. It's very expensive to do this construction.
I mean, selfishly, it's great. We already talked about an oversupply. You get rid of the abatements, we'll be able to have a bunch of years to absorb all that extra supply. I mean, because nobody's going to build.
Nick, you feel like jumping in there?
I can only echo everything everybody else said. Yeah, I don't understand it. It makes no sense. It's a foolish proposition. I think you guys hit all the points.
That's politics.
That's right.
So is there anything that we can do to kind of appease the naysayers on the abatement? Is there any concessions that you guys might be able to offer out there? This isn't a policy discussion, but.
No, it's not a concession. Mike just he said it straight. Even with new construction, even with just the abatement, it's not sufficient. Our rents do not justify, and we're already talking about an oversupply. We're lucky if the CBD is going to be able to maintain $2 rents, and that's at the top end. Okay, so the rents are going to be compressing. You can't support new construction at those rents, and the abatements are only the tip of that iceberg. People need tax increment financing for except the tip, the residential is all there. But there's additional low interest loans and things that are required to make these things pencil out. Like I said, I think it was either last year or 2 years ago on the conference. Again, putting the University Circle stuff aside, the only two new development projects, both the Beacon and Lumen, the abatement wasn't even sufficient. The only reason why the Lumen was built was the Playhouse Square created a fictitious cap stack that would justify, but in the private sector would never work. And we had the beneficiary of the vision of the Goldberg family, who built the infrastructure of those foundations prior to us taking over the building for the Beacon. And if we hadn't done that, we wouldn't have been able to afford building the Beacon. So truly, there has not been a pure high-rise CBD new residential building built without significant subsidies. And there's a reason for that. And to take away the backbone one is just ludicrous. To Mike and Dan's point, nobody's getting rich off of these things. A lot of this was local developers doing stuff to have a civic component too. Obviously, there's a capitalistic piece, but to build up their hometown. But there's no concession, because if anything, we need more concessions beyond the abatement. We're going in the complete wrong direction.
Politically, it comes down to people having the vision, and not all voters understand this, but the vision of, hey, if you want to help the neighborhoods, which I'm all for, I think probably most people on the web chat are for, but for there to be money, there needs to be jobs. For there to be jobs, there needs to be, people today, kids who grew up in Cleveland and go off to college, and some of them want to come back to Cleveland, like a pretty decent number want to come back to Cleveland relative to when I graduated college in 2002. None of my friends were here. The only people who were here were they were going to law school, or somebody who was fortunate to take over a family business or something. Almost nobody else I knew was coming back here because Cleveland wasn't cool. Now Cleveland is cool, and it's going to lead to more. If it continues, it will lead to more job relocations and reversing the brain drain. If that will have a trickle-down effect to the entire economy, but they're going to stop it if you take away the opportunity to continue to build up the downtown. Same goes with corporate subsidies.
And how many developers from out of Cleveland will just pass it by if there's no abatement? They'll build somewhere else, another urban core that has abatement and more incentives. So we've been the beneficiary of all these great, real estate families in Cleveland and companies that have done so many great redevelopments. An out of towner who wants to build and let's check out Cleveland. Oh, there's no abatement. Okay, well, we'll go somewhere else.
So, Nick, that's an interesting segue to how much interest are we seeing from outside of Cleveland, from the coast in our market, given maybe what's happening or trends that we're developing pre-COVID, and then now after March, the middle of March happened?
There's been an extensive amount of interest in the last, there always has been since 2003. There's, back then, I started the business in 2005, so I wasn't doing it in 2003, but when the market was strong, there's a significant amount of primarily West Coast investors at that time. And then the market tanked and, bounced along the bottom there. And now in the last couple of years, I've seen, more East Coast investors, to the extent where, I've sold some properties in the last year where I had multiple offers from buyers from New York and New Jersey, looking to buy relatively small multifamily assets, 50 to 75 units in eastern suburbs of Cleveland. So there's a huge draw to Cleveland from the East Coast, especially just people, searching for that cash flow, the slow and steady type of investment property that they can't find in the coastal markets or anywhere else. So that's continued. Things really hit a pause with the COVID situation, but it certainly bounced back with the interest from out-of-state investors, and it's primarily the East Coast. The West Coast is coming back somewhat for whatever reason. No offense to either coast, but the East Coast guys seem to be a little bit more savvy than the West Coast investors for whatever reason. So, but there's a significant interest.
I've seen a lot of the same patterns that Nick mentioned, and actually, in a sort of similar fashion, the idea of taking away take away subsidies versus imposing restrictions. Some of the reason why we've seen so many of these, New York metro area buyers flooding into Cleveland in the last 2 years is because these guys are all scared to death of all these rent restrictions and different sorts of landlord unfriendly laws that are happening in New York State, that these guys, they're all taking their money out and running to the kind of the first, Cleveland is one of the first places they can find that is affordable. And a lot of them have relatives here or know somebody, they know something about the market. And in 2019, we sold a lot of large deals. We sold a lot of, 20, 30, $40 million deals. And like 80% of the buyers were, New York, New Jersey guys, which was not the case previously. It's they're actually running away from something, and this has been a nice welcome place for them to run into.
Ezra and Michael, are you seeing opportunities outside the CBD to work with out of town, out of state investors, or how's that working?
Yeah, I would say that the out of town, out of state investors on development projects are starting to get a little more comfortable with Cleveland. We, consummated an investment with an institutional equity fund, which was their first, really the first they even looked in Cleveland, and they started to kick around. And I think when you peel back the onion on the demographics, I think everybody first looks at the demographics of Cleveland, and the population, lack of population growth really. But then when you peel back the onion and see where that population is growing, and where it's unfortunately, receding, you start to then get some interest there. But it's a very large education process anytime you talk to somebody outside of Cleveland about investing in a Cleveland development.
Yeah, no, I agree with Mike that it's definitely a heavier lift. And it says something about where we're headed as a region, and it's unfortunate. There are definitely pockets of growth. There is interest, but it's a heavier lift, and you have to educate them on this marketplace. And that's why 90% of what we're doing as a firm is out of state.
Well, it's interesting too, because this goes back to the conversation we were just having. Look at the development interest and those that are developing in Cleveland. There are a handful now of outside firms that are developing in Cleveland or looking to develop in Cleveland, but largely the development is done with locally held or local groups, because one of the reasons we just mentioned before is these projects don't pencil, and it takes a more time to put these projects together than in other markets, and so it becomes flyover country from a outside developer perspective in Cleveland.
So it's at 9:50. I'm going to ask everybody to put on their Swami hats and look into the crystal ball. If we get a vaccine, or if we pass this COVID disaster, when do you see that might be happening, and does everything go back to where we were at the beginning of the year?
I think that I already got my injection of Putin's vaccine, and he already sent me one. So I think we're all good. We'll have it in like a week, and the virus is magically going to disappear. So seeing as how like by October 1st we'll all be cured, or whenever that actually happens, I have no idea when it's going to happen. But I think that multifamily is going to come out of this well, just as an asset class. I think that there were a lot of almost dead retail real estate issues, properties that are going to die, and will eventually, if they're well located, come back as something productive. If they're not well located, they may never really be much, except maybe self-storage or something. I think, but everyone knew retail on the ropes. I think that office is going to. This was a fundamental game changer for office. And again, it's going to come down to like location, because I don't know anything about office. I have no idea how many square feet are rented in the United States or Cleveland or whatever, but 2 years from now, 5 years from now, it is going to be less square feet, because people for the first time work at home, and a lot of businesses say, hey, this isn't that bad, and people are productive. We don't have to pay. It's our biggest expense, and people like it. So, but people are still going to have to live somewhere, and I don't see everyone running to buy houses like they did in 2006. So I think overall we're going to be good. Just how long it takes to do that.
Yeah, I mean, I agree with the thing with, I think there's a new normal. I don't think there's ever going back. Okay. I don't think the new normal is where we were, in all quarantine. It's going to be somewhere in the middle, right? I think we overcompensated on the social distancing thing. So when there's a vaccine, there'll be some, come back to a little bit of more of a normalization. But the fact that we're all going to use technology for working remotely, and again, I think that we're going to see a lot of fleeing from the CBDs to the suburban markets. I think multifamily as a sector is good and will continue to be strong, as Dan mentioned. But I think there's a lot of political things that we can't turn a blind eye to. I think I believe Biden, on the Democratic ticket, I think Biden suggested that zoning may be thrown out a little bit of the window, that cities couldn't restrict necessarily some multifamily. So I think that could actually open up opportunities for developers on that end. And then I think the new VP with Harris, I think, wants to restrict evictions. So what does that mean going forward on a multifamily basis, especially on the value add assets? And one of the things I was thinking is maybe where operators were always looking at 12-month leases for financing purposes. If you can't evict people, the roundabout way of doing that, maybe you do short-term leases like 3 months to make sure people are paying their rent, and then the lease expires. But then how do banks adjust to that? So listen, everybody always is going to need a place to live. To the point of retail and stuff like that, or office, there's different technology has really disrupted it. Up until now, unless we have brains attached like the Matrix, we all need to house our bodies, right? So there's always going to be demand for housing versus apartments. And again, I think multifamily can really present a value versus home ownership, especially if you're transient, especially if you're in a specific stage in life where you're going to need a house at some point. So there's totally always going to be a demand for multifamily, but I don't think there's ever going to be a new normal. I think there's going to be pre-COVID and post-COVID. I think if we're expecting it to be completely the same, I think it's a wishful thinking.
I agree a lot with what Ezra and Dan both said. I think multifamily is going to fare well, though, through and after this pandemic for a couple of reasons. I think largely you're going to see investors flocking out of other asset classes and into safer asset classes, multifamily being one of them. You're also going to see historically low interest rates, I think, at least for the foreseeable future. It's going to make these projects easier to finance. So as a whole, the asset class, I think, is going to remain healthy. But when you get below the layers, people are still going to want to, I think, live in well-located areas with amenities. But is it going to be the CBD? No, I think that's going to hurt for a little while. So I think as you look at the different submarket, that's where you're going to see perhaps some different levels of, pain, so to speak. But I do think multifamily, I mean, think about how many people have lost their jobs through this pandemic, lost a good amount of equity perhaps. They're not going to be able to buy a house. They're going to have to live somewhere. So again, I think ultimately multifamily will fare very well and continues actually to do so right now. But it's not just going to be like take aim and fire with a blindfold on it like it was, for the last 10 years. It's going to have to be a lot more strategic.
Yeah, I can just echo everything everybody else said. I mean, it's interest rates are really driving this thing. I've put several deals under contract post-COVID, and some of these are coming in at relatively what you could say is a record price. So as of right now, I can't see it taking a downturn. I think things will flatten out as we get into next year with rents and vacancy, rents being flat, vacancy potentially going up more. But that's what everybody says. People need a place to live. That's what everybody falls back on. Office, retail, those aren't investments that, people are as comfortable with right now. So people are going to continue to go, investors are going to continue to go to multifamily. And, that didn't change the last downturn we had where people, lost their jobs, didn't have money to afford a home. They were, vacancy spiked a little bit where people were living with their parents or, getting roommates. But, I don't think we'll see a downturn or anything like that this time around.
Dan, you feel like jumping in at all there?
I did.
He was the first.
Yeah, I
and so memorable. He was so memorable.
All right, moving on. So we're here, we're deal makers. We're making things happen. Is there a silver lining to COVID? Are we gonna have some deals out there in 3 to 6 months?
Hey, everybody still has loans maturing, and grandpa having a stroke, all the different things. I mean, let me and motivate people to sell buildings, okay, or partnerships breaking up. All the things that non-greed based things that happen that make people want to sell a building, those are still happening during COVID. They're just not. They're going to manifest themselves twice as much when people are comfortable doing deals again. So that's all still happening, and people are still going to have to sell for the reasons they have to sell. And I think once they see that pricing is still there, people will come back to selling because they want to sell and collect profits.
Right. And there's not blood in the streets. So people saying that, looking for these tremendous opportunities, that's just not. I know zero owners or sellers that are, here's COVID and there's riots, I've got to sell. Just get me out of this thing. That's just not happening.
Yeah, everybody and their grandmother has raised a distress debt fund.
Right.
Okay? So when everybody raises the distress debt fund, there is no distressed debt because you're going to have a bidding war on those properties. So I think on the I think you're seeing a juxtaposition. The brokers are seeing there's so much money out there because there's so other little asset classes to choose from. So even though multifamily is struggling for itself, the other real estate asset classes are getting crushed so badly. Take industrial out of it, but on the retail commercial side, that even though as an operator developer and we're trying to make the numbers work, it's being more challenging. On the sell side, there's so much money out there that we haven't seen it really impact pricing. So it's there's a little bit of a disconnect and an inefficiency in the marketplace, which is really interesting to see. I don't know how long it'll last. I hope it'll last as long as I want to sell properties, but until then, it is interesting to see kind of the differing viewpoints from the different operators.
Yes, Steve. Yeah, Steve, you asked what the silver lining is. I think the silver lining is that multifamily might come out stronger in some ways because of all that pent up demand.
Yeah.
Stressed assets, like Ezra had mentioned. So I think at the end of the day, the silver lining is that once we get through this, is the multifamily is going to be more desirable. As you look across the asset classes. So I think it remains a very solid long-term place to invest. Which, like Ezra said, operationally, from a development perspective, it's difficult, but I do think that strategically speaking, it'll fare well in the long run.
Okay. We've got a screenshot just popped up here. We're at 10 o'clock. Oh, we got 1 minute left here. Does anybody have any parting words? Is this a asset class? Is it a buy, sell, or hold?
It depends.
It depends where you are.
It depends.
It's a great time to buy. It's a great time to sell.
Yeah,
Well,
it really is.
The brokers are going to want you to do as many transactions as possible, for sure.
Yes.
The one guy who should know to turn his microphone on forgets to turn his microphone on. I got a quick question for you all. In the apartment market, if this government stimulus doesn't happen, what is the effect on the apartment market? Do you think we're going to start to see more delinquencies?
I definitely think that. I think it would be sort of magical thinking to not think that with so many people working.
So is that a death knell? Is it going to go bad, or is it just a blip?
Hard to tell.
I think
it depends on how quickly employment ramps up again.
Well, I think it could be for some properties that are on the edge, because all of a sudden now you'll have people squatting for 6 months in your building, not paying rent. I mean, that's where it's going to kill the owners, because it's one thing if people are delinquent and don't pay the rent. It's the other that then you have no recourse to collect or to get the apartment back. So you kind of have both your hands cut off and tied behind your back. So that could be very challenging for some operators.
Yeah, it's hard to sell when your P&L's trash too. Well, thanks everybody. What a wonderful panel. I look forward to meeting you all in the future. Maybe we'll get to Cleveland from Minneapolis here. We're going to get to our next panel. If you're online and you're listening or watching, go back to the lobby, the virtual lobby where you got this link from. Click on panel 2. Click on that link. I'll meet you there in 10 minutes. Another shout out and thank you to our sponsors as we let these gentlemen log off. Thank you. Final goodbyes. Have a wonderful morning.
Thanks, everyone.
Thank you, everybody. Thanks for having me.